Nigerian Forex trading and training company MBA Trading and Capital Investment Limited is promising distraught investors they'll soon get their capital back. The company blamed its inability to pay out returns on market volatility, among other challenges. Investors have been calling for payment of their capital across social media platforms and even news platforms. Well, joining us to discuss Forex trading and its risks is Muktar Mohammed, Capital Market Analyst. Muktar, you're very welcome. Thank you so much for being here. I'm glad to have you. So, first of all, what do you make of Forex trading? I want to ask you.
You see, Forex trading is like any other investment. It's not a bad investment. Okay. It's just that it's a very volatile investment, very volatile, because it has to do with trading of currencies. Every currency in the world is very volatile. You just need to look at the naira to the dollar exchange and know how volatility can come in. Yes. Especially in the year of the pandemic, where almost all economy are taking the bash. And so definitely you have challenge when it comes to Forex trading. Like every investment, the higher the risk, the higher the return. So Forex returns are relatively very high, but the risk also is very, very high.
Okay, great. So if someone knows how to make money from Forex trading, why do they need to go into trying to teach other people and collect money from them to do? Why don't you just quietly make your returns, make your profits, and just relax?
You are good at what you do. Why are you not quietly setting up your own television station and just do your thing?
Well, television stations are as risky as Forex trading.
No,
so that,
it's the same thing. We're looking at impact. Some of them will say they are trying to impact, but that was on a lighter note. But
right, I understand what you're saying.
But then really, some of them are not really Forex. They are Forex brokers.
Yes.
Some of them are Forex brokers. They are not Forex traders. There's a difference between a Forex broker and a Forex trader.
Okay.
So some of them are going, or we can use it like some of them are Forex marketers. They market you in Forex by marketing that you should come and do Forex. They have a percentage of every investment that you put in there. So they are not bothered when you lose or when you gain. They make their own investment by bringing you into that platform. There's a certain amount of percentage that is being paid to them. So that's how some of the Forex traders also does that too. Also, they are both a broker and also a trader. So which other way they are trying to make money. So it's sometimes most of these investors that trade on Forex, like what you make, like you did in your introduction, they just give their money to the trader. They don't know how to trade. The trader trade for them, makes the return, and then give them whatever he has to give to them.
Right.
So and then they promise them a type of return, and sometimes these returns are not even they'll pay that return once or twice. So they will get some from other people that are not even making money, but they promise them return, believing that before that your own time is due, they must have made the return. So that's why you see them they get caught on it, and they are not able to pay. So definitely it has everything to do with speculation. Forex trading is all about speculation. It's all about high volatile investment. So it's speculating between a currency. It's not a long time like an investment in equity whereby you buy in a company. You are looking at a currency to another currency at a particular time. So it depends on what, and the Forex trading has different types. There's the one that is more or less like you are trading on currency.
Yes.
Then you wait for it, the currency goes up, maybe you pay the naira to the dollar to the pound sterling,
yes,
to the Australian dollar. You just do your pairing and it works out for you.
Yes.
But they are the ones that you have to do with when you are following the blue line or the red line.
Like technical analysis,
technical analysis.
Right.
And sometimes those ones you just do it. You're on your system and you have somebody that is directing you people. And once that person gets it, sometimes you must do it as fast as possible, because I had somebody that was involved in it.
Yes.
And the person they told him, oh, look, you can make so much money from Forex trading. And he almost resigned her job. So I told her, I said, look, before you resign your job, why don't you try it? She did it for like 1 month. She never made any. She didn't even make $200. But they made her understand that you could make $1,000 every week. And it was like, if I can make $1,000 every week, why am I working?
Right. Thank you for this. Do you think not just Nigerians, people around the world are well versed in the risks of this trading?
No. Most people just want returns. That's why you see they give you the money and they promise you a high return and you're not able to check in. The Forex will tell you that, okay, every month, if you give us like $500, we'll be giving you $1,000. And can you ask yourself that if it's that easy?
Exactly.
Why is everybody not doing it and just making the cap? So it all comes about to the mentality of greed. And sometimes, because in Nigeria,
yes,
we will not boil to lack of various investment vehicles. So if you look at Nigeria, the investment vehicles you have, the return, some of them will say, look, the return is not commensurate to inflation.
Right.
They will say, okay, do I trade in stock? Maybe I've lost my money in 2008. I lost money, so I don't want to go there again.
Right.
Treasury bill, the return is very appalling. And money market, do I have to? So they look at all, and they just look at, which one can I make money easily? And they go into Forex trading.
Thank you for that. Speaking of investment vehicles, yesterday on the show, we're talking about MTN's commercial paper issuance, right? And I wanted to ask you, if you're putting together an investment portfolio, how much, what asset classes are you looking at? Stock, and would you, I guess for the purpose of risk, maybe it depends on the person's risk profile, would you allocate a bit of that, of the portfolio to Forex trading?
You told me, no.
You wouldn't?
No, I wouldn't do
So what
that.
asset classes would you look at?
I would look at, depending on the person's age, because you have to look at the person's age.
Right.
When I'm making money at the age from 30 to about 49, 55, it's always easier to take high risks.
Yeah.
But by the time you get to your 56, 57, or to your 60, you are beginning to think about conservation of your resources.
You're closer to retirement.
You're not looking at those, you just want to conserve what you have, no matter the returns you make. It's just for conservation of wealth. That's what you are doing. And at your 70, you're looking at legacy distribution of wealth. But from this order, you look at, what can I take the risk? Can I lose this money? Can I make it back? So those are some of the things you look at. Then based on that, like you say, you look at the person risk level, then you begin to plan his portfolio. You can say, look, as it is now, we do money market, we do equity, we do
T-bills,
bond, treasury bills.
Yeah.
But I've never seen any investor, I might be wrong, but I've never seen any book on investment, any book on that telling you about planning your future, even building an estate that tells you that you can plan an estate with Forex. I'm interested in, no. It's not done because it's a very, very risky investment.
Thank you for emphasizing this. The Bureau of Statistics just released two really not so good data points. One, inflation just came out this morning. That's a new 4-year high. Yesterday was unemployment. The state of the economy, is that part of why people are pushing them? You mentioned greed.
Yeah.
Is that a result of the greed?
The state of the economy, yes. See, these people strive. Most of all these high return investments strive when you have low returns, especially when it has to do with economic challenges. And also they strive also when you have high returns, because they now tell you they will give you higher than that. So it has to do with the individual. What is your goals? Most people don't have goals on how to make their money. Everybody just wants to make money. Don't choose your vehicle that you want to make money with. You need to choose your vehicle, then you need to study that vehicle. You need to know the risk level of that vehicle that you want to drive. It's like you're driving your car in the morning, you don't look at the you don't look at the oil, you don't look at the gauge, you don't look at anything, you don't look at your tires, you just drive the car. Maybe something was wrong with the car overnight and you didn't look at your dashboard, or a light is coming for your dashboard, you don't know what the light is all about. So when it comes to that area of investment, you must know what you are trading in before you'll be able to not fall into most of all these schemes. There are a lot of schemes around.
Right.
There are a lot of schemes around, especially when you have a struggling economy like ours, when every investment, and then you couple with the pandemic, a lot of things will have to happen. That's why you see people will tell you about this investment. Nobody is telling you about the risk. They only tell you about the returns. And sometimes, again, people, I'm surprised. You're telling me you want me to come and invest in something, and your lifestyle, sometimes they go to meet people that are even doing well, and you are giving money to somebody that even when you look at him is not doing well, and he's telling you that it's investment. So it has to do with your planning. Do you have your goal? Do you know what you want? Do you have an investment vehicle you want to drive? Do you have an understanding of the vehicle that you want to use to create wealth? And again, creation of wealth is not all about creation. It's about sustainability.
Right.
How can you sustain what you have created? That is the major challenge. And if you have those plans, you don't easily fall into some of these schemes because you have a roadmap and you're working with that roadmap. Even through the good and the bad times, you know that your goal is 10 years, 5 years. Most people that fall into this type of investment risks, investment schemes that are not paying them well, or they lost their money, are mostly people that doesn't have that long time goal. They don't have that patience to wait for. They want to make the money now, and they want to make the return now. They want to build buy a house in Ikoyi, buy a house in Banana Island.
And that's what the trouble
That's
starts.
all.
I had more questions, so I have to bring you back to talk more about this. Muktar Mohammed, Capital Markets Analyst, thank you so much for joining us.
Right.